I think a lot of us put our head in the sand because we feel like the numbers are a reflection of our work, our ability, and especially as women in business, ourselves sometimes. That drives so much more of us putting our head in the sand than what those numbers actually are.
All right. I'm Rebecca Hay, and I've built a successful interior design business by trial and error, podcasts, online courses, and so many freaking books. Over the last decade, I've grown from an insecure student to having false starts to careers, and now I'm finally in the place where I want to be. Throughout my journey, it's been pretty obvious that I'm passionate about business and helping other entrepreneurs do the same. Each week, I'll share tangible takeaways from my own experience and the experiences of other badass women to help you build your confidence and change your business.
Hey, it's Rebecca, and you are listening to Resilient by Design. And today's episode, this one is for the designer who keeps avoiding the numbers in her business. You know the feeling. You see an email from your bookkeeper and immediately your stomach drops, or you don't even open it. You push it off to a later date. You keep meaning to sit down and look at the finances, but somehow there's always something more urgent. A client email, a sourcing issue, you're needed on site, a presentation's around the corner. Literally anything feels better than opening up QuickBooks. And maybe lately you've been asking yourself questions like, why am I making more money, but I still feel stressed? Or what does it feel like to actually have money left over? Why am I so freaking busy and I'm not building wealth? Or maybe the scariest question of all, am I even profitable? If any part of that hits home, I need you to hear this. Avoiding your numbers does not make you bad at business. It simply makes you human, especially as creatives, because most interior designers were never taught how to understand the financial side of running a business. We learned how to create beautiful spaces, not how to read a P&L statement or forecast cash flow or understand where our profit is actually coming from. And here's what's fascinating. So many designers think the problem is that they need more clients, more revenue, higher fees, more projects. But what if the real issue is that you don't fully understand the story your numbers are telling you because your bank account balance, that's not the full picture. In today's conversation, Danielle Hendon from Four Corners CFO breaks down the financial side of business in a way that feels approachable, practical, and honestly kind of freeing. You're going to learn why revenue and profit are not the same thing, the mistake designers make when they only look at cash in the bank, how to know if your projects are actually profitable, why tracking your time matters way more than you think and for different reasons than you think, and how understanding your numbers can actually reduce anxiety instead of create it. This is one of those episodes that could genuinely change the way you run your business, because when you stop avoiding the numbers, you stop operating from fear. You make smarter decisions. You price with more confidence. You lead your business like a CEO instead of constantly reacting. And honestly, I think every designer needs to hear this conversation at least once. So we're bringing it back for you. Before we dive in, I also want to let you know that after today's episode, we will be taking a short summer break for the podcast. I have literally never done this before. This is the very first time. We will be back very soon with brand new episodes, fresh conversations, and so much more. So for now, listen to this one carefully because it might just change the relationship that you have with money and your business forever. I will see you after summer. Enjoy this rebroadcast of my episode with Danielle Hendon. Today, I am with Danielle Hendon. She's the founder and owner of Four Corners CFO, which is a firm that offers financial advisory services to small business owners on a scale that fits their company and budget. She couples her decade of experience in corporate finance and accounting with her passion for small business owners. Danielle brings the benefit of big business financial analysis to entrepreneurs. And now, instead of helping corporations increase share price, Danielle gets to help businesses like yours and mine increase their personal livelihood so that they can leave a legacy and a lasting impact on their community. The conversation I have with Danielle is not to be missed. It is about the value of understanding your numbers, financial planning, and looking at your year and reviewing. As we get to the end of the year, this is a perfect conversation to be having, which is, How did you do this year? Financially, did you make a profit? We talk about profit margin. We talk about what should you be doing as an interior designer? What areas are most profitable? Is there a standard profit margin? We talk about all of that and then some. Danielle shares a really interesting tip about how you can categorize your expenses. It is one that I have never heard before. So hang on to your horses. You guys are going to love this episode with Danielle. Enjoy. Welcome to the podcast, Danielle. I'm super excited to talk all things money with you. I'm so happy to have you here today.
I am so happy to be here. Any chance I can get to have people talk, think, look at money and not just put our head in the sands, I'm excited.
I love that. Why don't you let our listeners know a little bit about who you are and what it is that you do?
So I am a fractional CFO, owner of Four Corners CFO. I'm actually a CPA, though we are not a CPA firm. And I did not take the traditional route getting here. I love telling my origin story because I think there is a very creative part of my brain that doesn't get to be acknowledged except when telling my story. And that is the musician in me that thought I was going to be an opera singer when I went to college.
Wow.
Yeah.
Cool.
I thought it would be really cool until we had an English professor that told us to write all about the future of our career. And I realized I don't have any friends in high places and I don't want to be a teacher. So I'm going to be broke or I need to do something else. I did have friends that were in the business school doing accounting. So I went over there, tried that out. There's this weird mix of music and numbers that just makes sense. And I don't know why, but my husband laughs at me all the time with what I had done up until that point in like small jobs and stuff through high school and college. He was like, I don't know how you didn't know you're supposed to be an accountant the whole time, but okay.
Oh, isn't that interesting? Sometimes we just can't see our own natural abilities. We're just too close to it sometimes. It takes having that third party kind of recognize it and say, no, you're really good at this one thing. Or like, I always talk about you as being good at this. That's really interesting.
It's crazy and hilarious. But so I did the accounting degree, got my master's, got my CPA. I went into public accounting like most people do when they get an accounting degree. And then I started a family and realized I didn't want to be working 80-hour work weeks with a newborn at home. So I left public and being in the Houston area, I landed at an oil and gas company. I loved what I did. Honestly, I loved what I did in public. I love everything about numbers and I know that makes me crazy, but I've always really enjoyed what I do. The oil and gas company I was with, though, went through bankruptcy. And they came out the other side, owned by financial bankers who started slicing and dicing everything up. And then the pandemic hit. It became very clear that that business was going to close. At the same time, it was an opportunity, and I don't want to take away from anything anyone went through during the pandemic, but I think so many of us found this silver lining of just slowing down. It was an opportunity for what I will say was a workaholic mom, because when you love what you do a lot of it, to get to be the figure out school and get to know the teachers and get to know the friends and the coaches. And I didn't want to give that up.
I can relate to that. Yeah. I know a lot of our listeners are moms, so they can relate to that. Yeah.
And it was that moment where I was like, okay, I could go back into corporate. I could go run another audit department. I could do all the things, or I could try to live life a little differently and keep this piece of it where it is. So I started Four Corners CFO with the knowledge that, though I never realized I'd say I was grateful for a bankruptcy, having gone through that process with a corporation, I knew how to take these really big business concepts and scale them down. Because at the end of the day, the controller's calling me saying, hey, Danielle, how do we do this with just 2 people? I don't know what you want me to do. And I was like, well, okay, think outside of the box time. But now we take all of that to small business owners. And instead of increasing shareholder value, which is what it's all about in a corporation, we now get to increase livelihoods and legacies. And that just feels really cool. And I get to grow a team where family and relationships mean just as much as work.
That's cool. I love that you're helping small business owners. I mean, as interior designers and decorators, stagers, the like, we are all small businesses. And it's funny, I think that the government isn't there like a small business is like something like up to 500 employees or something?
Really big.
Which is so crazy to me. I'm like, that does not seem like a small business, but I guess it's all relative on the global scale.
I'm like, 3 to 5 sounds small to me, but okay.
Yeah. And a lot of those listening today don't even have any employees or haven't even outsourced anything yet. Some of us have built teams and some of us have freelancers helping, but we are small business. And so I love that there are people like you who are helping. So I want to dive into this because this is definitely an area that interior designers, myself included, as creatives have never really gravitated to. Like literally today, I wrote in my full focus planner because I'm about to go on a trip tomorrow. I'm like, frick, Rebecca, you did not answer the bookkeeper's questions from 3 weeks ago. Because I look at the email and it's like, can you please tell me all of the like unreconciled whatever transfers and who was it for? And I'm like, oh my God, that just like, ugh, gross. Don't like it. Don't want to do it. I try to outsource as much as possible, but it actually doesn't always help to do that.
You can't outsource your brain.
I know, it's so frustrating. So I want to talk about that. And I want to talk about that sort of financial part that a lot of creatives are not necessarily that we're all missing, but we don't even necessarily want to spend time doing because here we are like decorating and designing. And I actually had one of my Power of Process alumni, Andrea Krill, came on the podcast recently, and she was a CPA working on Wall Street and then started her own interior design business. And she even admitted that for the first year of running her design firm, she ignored the numbers. Because there is just so much. It's almost like the story of like the cobbler's, what is it? The shoemaker's children don't have any shoes, right? It's like we're so busy just trying to like create and client serve and do all the things. It's like, oh, the numbers feel like this pain in the ass that we kind of don't want to pay attention to. Do you experience that with your clients? They kind of ignore the numbers?
Absolutely. I think the easiest thing to do is to put your head in the sand and just pay attention to your bank account because you know it's in the bank account. And if the bank account's got money, you've got money to spend. Not my recommendation, but it is normal to think that way. And it actually reminds me of my kids are swimmers and one of the swim moms owns her own business. And we would get into these conversations while the kids are at practice. And she would literally be like, Danielle, you're making me sweat. I can't talk about this anymore. And I'm like, I get it. Like I can get so amped up about it. But then I also have to remind myself, it's like a foreign language to so many people. You are not taught accounting. You don't know the lingo. You're not supposed to know the lingo. The numbers look like a sea of mess on a page. That is overwhelming to even look at, let alone think about, try to understand.
Mm-hmm. I mean, I think this is a good conversation to have because we are approaching the end of the year. And whether or not it's your fiscal end of your year or just a calendar year, I can tell you my fiscal year is like July 31st, but yet I still think in calendar year. So it's like December's coming up and I'm like, I need to look at how we did. Mm-hmm. Even though that's maybe not how I file my taxes, it is definitely how I plan for my own business needs. I think a lot of designers are the same. Let's talk about that. Like if you're someone who's ignored kind of the numbers and buried your head in the sand, to use your words, what is the first step we need to do? Like before we get to the place where I'd love to talk about doing a financial end of year review or whatever you call it, whatever that looks like what is the first step that we need to do to kind of start to pay attention to that?
So the first step is ripping off the Band-Aid. You have to actually take your head out of the sand and realize it's not a judgment tool. I think a lot of us put our head in the sand because we feel like the numbers are a reflection of our work, our ability, and especially as women in business, ourselves sometimes. That drives so much more of us putting our head in the sand than what those numbers actually are. It's just a tool at your disposal. It is something you can look at. It's not judging you. It's just showing you what's happening. And I tell our clients one of the things we talk about the most, it's a way to understand the story that your business is telling you. If you allow yourself to use that tool to understand the story, then you get to make better decisions going forward. If you keep putting your head in the sand, I have had business owners come to me that grew a business to multi-million dollars on gut instinct and bank account. You can do it. But it's not always going to feel good. And being a business owner myself, I know what it's like to go through your business with the constant what ifs and the anxiety and what's going to happen. And I don't know the future. And how do we do this? And can I do that? All of those answers are honestly in the numbers if you're willing to look at it. So the very first thing you've got to do is rip the Band-Aid off and be willing to look. The second thing to that is make sure you've got something to look at.
Right. I was going to say, what do I look at? Where am I looking? Help me out.
I never recommend business owners do their own bookkeeping for a couple of different reasons. First of all, your time is worth so much more than you would pay a bookkeeper to do it. You can find really reasonable bookkeepers for really reasonable rates to help you out. Even if you're a startup, there are bookkeepers that adore startups and they're all about trying to help out. You do not need to learn how to use bookkeeping tools or do any of that. What you do need to know is how to look at it, though, and where to go look to see what those numbers are and be willing to go look. So first of all, go find a bookkeeper. Please don't do your own books.
Yes, I agree. I wholeheartedly agree with that. Yes.
And then just be willing to look.
I just want to add, because I've seen this, and this was me for a while, but also I see designers do this where they're like, oh, I just have my accountant do my taxes at the end of the year.
Mm-hmm.
And that was me for many years. And the problem with that is that I had no idea where I was at until the end of the year. Like literally, I didn't know how much money I made until I filed. I was like, oh, I paid myself how much? Oh, that's how much HST. It's our tax here in Ontario. That's how much tax I owe. Oh, I didn't save that. Like I was not aware. And so that transition to a monthly bookkeeper, and I think that's probably what you're suggesting, was a game changer.
Yeah, I mean, that's how you know what's going on every month, because I will give you an example, especially for interior designers, because a lot of times you guys will take payment up front and payment at the end, and you're buying who knows how much stuff in the middle to get things done. Your bank account is not an accurate representation of what's going on in your business.
Yeah.
You don't know what's coming in and what's going if you're not keeping up with those books. And I have had clients come to me in the interior design space where they weren't even able to keep up with what they'd bought and had they invoiced it, because there's just so much going through all the time.
Yeah, it is a very complicated business model. I have to say, and I don't think a lot of us realize or appreciate that before we go into the industry, because we are reselling products to clients. We're taking a deposit. Like there's so many different ways, a retainer. There's so many different ways to do it. Absolutely. So bookkeeper. Okay, so we've got our head out of the sand. Now we have a bookkeeper who's going to help us. What's next?
I will tell you, the first line every business owner looks at is not actually the line I would recommend you look at. Everybody can usually tell you their revenue. It's the one thing people know is your revenue. And what was your revenue?
Exactly.
But I want you to know what your profit is. Because at the end of the day, revenue doesn't mean anything if it's not enough to cover all of the costs and leave you with a profit.
Yeah.
So make sure that you're looking at that P&L and understanding what that profit number is. Again, kind of back to, depending on how you're pricing and how people are paying you, you could be losing money without even realizing it.
Mm-hmm. Mm-hmm. Yeah. I think too, as we start to grow and scale and you get bigger projects, I know I fell into this trap as a designer where you're like, oh my gosh, I just landed this amazing job. I need to hire someone to help me. Oh, we got another job. I need to hire someone to help me. And then I was like, I'm getting an operations manager. Then I'm going to have this administrator. Then I'm going to hire a junior. I probably need a senior designer. I'm thinking about what the project needs, but not thinking about how it might potentially drain the bank account. And you can get to a point where all of a sudden it catches up with you. And all of a sudden I looked at my expenses. I don't know, it was a few years ago. And I thought, and I wasn't paying attention. My head was in the sand. This was like in the first 4 years of my business. And all of a sudden someone brought to my attention, Rebecca, you know, your payroll is $30,000 a month. I'm like, well, that can't be. That's not possible. I don't make that much money. But it was. And that's not including overhead, like the studio that I rent, the computers, that you name it, all the things. And so it was really a wake up call for me when I had to really start paying closer attention to like, okay, if I want to sustain these expenses, then I need to be really intentional with bringing on a pipeline of projects.
And pricing those projects.
Yes.
So on the note of profit margin, this is not technically the way most accountants would tell you to do this. But with our clients, I want to see any revenue generating costs in that revenue section, which means anybody you bring on to provide services with that client, whether it's freelance, contract, payroll, I want that number up there by your sales number so that when you're looking at what you've actually made from your projects, it truly is your profit. And if you are a solopreneur and it's your hours going into this, and I know you don't want to do this, nobody I talk to ever wants to track their time.
Nobody.
You need to know how many hours you're spending on it and put the value of your time up there as well.
Interesting. So sales generating versus, let's say, rent.
Mm-hmm. Yep. So separating your costs between, we call it revenue generating and non-revenue generating. There are very technical accounting words, but that makes the most sense to most people. If the actual expense that you're paying is generating revenue, it's literally their $100 billable per hour on your service, or they're part of the flat fee that you've charged, or it's a product that you're marking up. It is a revenue generating cost.
So interesting.
But if it's your rent or your ops manager who is not necessarily generating revenue, then they go down in the operating expenses.
I have never done this, Danielle. This is so cool. I'm like, okay. I'm like, one more thing to do. Shoot.
Wait, answer the bookkeeper first and then go on vacation.
I know. It's not vacation. It's work. I'm going to High Point Market.
Oh.
Which is an expense. Is it revenue generating? Or is it operational?
No. So I would tell you it is revenue affiliated. So it goes in the operating expense category. And when we work with clients, we take those operating expenses and we put them in 3 buckets themselves. So if it's not revenue generating, it's an operating expense, and it's going to either be required. So I don't know a business that runs without cell phone and internet. Like, it's just not possible today.
Right. Yeah. Or web hosting.
Yes. So if it's not required, it might be what I call a personal perk. So depending where you are, whatever tax benefits you can receive as a business owner. One of my favorite examples in the US is my kids are on my payroll. They do not add an ounce of value to my business, but it is tax defensible and it's a tax benefit, and we do it. So that is a personal perk. Another thing that might go there would be a passion project of yours, a charitable contribution that you just insist you want to do. Those types of things go in personal perks.
Okay.
Everything else, like your High Point Market, would be an investment in your business.
Correct.
And while it is not revenue generating, it should have a return on investment. So it should be giving you time, money, or both. And things like conferences, courses, going to the High Point Market is not just an investment of your money, but also your time.
Right.
So making sure that whatever is happening while you're there is going to return time, money, or both in excess of what you're spending.
That's great. I love that advice. Also being intentional. So when you are going on these trips or you are investing in the course, in the sake of a course, like, do the work, implement those systems into your business, whatever you're being taught. Or if you're going to High Point, okay, connect with the people that you want to connect to so you can get better pricing on products. Or in my case, connect with other potential marketing partners or podcasters or what to help, push the marketing forward for my coaching business. It's about going with intentionality. Otherwise, it is just kind of like a vacation.
And they can be exhausting too.
Oh my, they can be? No, they are. They are exhausting.
You need a vacation after you go.
Quick question, somewhat related. I'm flying to Nashville tomorrow for a mastermind. So I've invested in a mastermind. And then I have one day, and then I fly to High Point Market where I'm hosting an event and a panel and that sort of marketing for all the things for the podcast. For this podcast, we're doing a live podcast recording. But there's one day in between that, and I want to get a massage, and I'm going to pay for it with the business. Is that okay? Or does that depend on your region?
Depends on your region, but I would say probably not. Maybe if you took a client,
a shareholder benefit, or like, I'm giving up my weekend to work, so I need to be ready to show up.
I mean, I feel like you absolutely need it and deserve it.
Obviously.
Whether or not you can write it off for tax purposes might be a little iffy.
And that could depend on region, I guess, as well, on how it's all categorized.
It can.
Quick break here. Raise your hand if you've ever chased a client through 17 email threads trying to get specifications approved. Yeah, we've all been there. There is a program, It's called Programma, and it gives clients a simple approve or reject option for each item. Everything is timestamped, and you have a dashboard view of exactly what still needs to be done. No more digging through email threads and text chains with clients. Plus, if you use Canva for client presentations the way that we do, you can embed them directly into the client portal so everything lives in one place. Programma is the kind of project management system that keeps projects moving without you having to constantly follow up. Yes, it's true. Go check it out at programma.design and use code RBD25 for 25% off your annual subscription.
Okay, this is very eye-opening, Danielle. I did not expect us to go here, but I'm loving it. This idea between like revenue generating expenses versus just the standard operating expenses. So like, guys, if you're listening, like write that down and go do that. What else do we need to look at after that?
The revenue generating is what got you to profit margin. The operating is where we can kind of trim some costs, and it gets you to what we call net income. So like that net profit margin, did you have money at the end of the day? Is it black or red? Is there money or not? That number is still just based on your P&L, your profit and loss. There are other things that need to come out of that number that will hit your bank account at the end of the day. And you mentioned this earlier in kind of one of your or earlier stories, taxes are going to hit you whether you like it or not. And my goal is that everyone's profitable. And if you're profitable, you're paying taxes. I'm sorry. It just has to happen.
Yeah.
And you don't want that to be a surprise.
Yeah.
So if you know that you're generating income after those operating expenses, you need to be saving for taxes. Mm-hmm. You need to be giving yourself a profit distribution.
Right.
And you need to be saving for emergencies.
That's a lot of things that need to come out of that.
It really is, especially when that number in a creative space like interior design and space, everything is so project based. Mm-hmm. There's not the level of consistency that you might see in other service providers. So that number is going to fluctuate, which means that savings is even more important than it is for a lot of other professional services, because you're going to have what we call kind of a feast or famine cash flow.
100%.
And you have to be ready for the famine.
And you know what? I love that actually you acknowledge that and you understand that. Obviously, you've worked with interior designers, because that is something that sometimes is hard to describe to someone who's not familiar with the industry. You know, we get this big project, they give us $300,000 lump sum to start placing orders and you think, woo, we're rolling in it. But meanwhile, like, I don't know what your margin is on that. And that's going to take you until next year. Mm-hmm. By the time next year rolls around, you're like, oh my God, I hope I get another project, because now I'm robbing Peter to pay Paul because I've already spent that money. And it goes up and down. Digging
out of that hole is so hard. And we had a client recently, and it was just, okay, how do we pay the credit card? How do we pay the credit? And every time it's maxing out and maxing out. It comes down to a couple of things. It's going back to those revenue generating costs and making sure, I know you don't want to track your time, but if you are spending more time than you think you are, you might not be pricing yourself where you need to be. I also am a fan of what I'm going to call the PITA cost. When you talk to somebody and you know this client is going to end up being high maintenance, that needs to be baked into what you charge, because it's going to take your time to do it.
Yeah, I know. That I feel like is a whole other conversation about charging for your worth, pricing your services, and calculating the right design fee, and starting to look at, was I profitable? That's a whole other conversation. I don't want to go too far down that rabbit hole, but we could have that again. I love talking about that. I have so many horror stories from my own life that I always love to share, to pepper in. Do as I say, not as I did. But what I would love to know from you is, like, back to this conversation about the end of the year. So here we are, we're nearing the end of 2024 at the time of recording. And what do we need to do to look back at the year? Like I always do. I have my own little version of an end of year review. It's not just financial. It's also looking at the clients that I love to work with. What were their attributes? What would I do differently? Spending my time. And then I do look at projects and I look at products, right? So the products that we resold, which ones had the best return, like best profit margin? Which vendors did I like working with the most? Like, who did I give the most money to? Okay, let's use that and leverage that into the next year. Like, do we give them more money and say, listen, you need to give me a better discount? I do things like that. But from a strictly financial point of view, I would love to hear from you. What do you recommend? And I'm sure it's quite robust and you can't go into detail, but at the very highest level, what do we need to do towards the end of the year to set ourselves up for success financially for the year ahead, 2025?
So it's a combination of looking back, but also not forgetting to look forward.
Ooh.
I love budgets. It's like our bread and butter is budgets and cash flow and all of that forward-looking stuff. But to get there, you have to also understand the past. So going back to like the bookkeeper and having your head out of the sand, you've got to be able to look at those numbers. And especially for a project-based business like you guys are, you need to be able to look at the whole year, not just this month. How did this year go?
Yeah.
And I would ask you to compare it to how did last year go? Are you growing? Are you shrinking? And it's going to be two different numbers you want to look at. Revenue is important. I don't want to take away from how important that number is, but I want you to know if your profits increased or stayed the same. If you are growing in revenue and you have the same amount of profit, then really all you did was just create more work.
That happened
and
to
pay
me.
more people.
It's so interesting you say that. I did let's look back at the last 10 years. And there was a 2-year period where I was like, wait a minute, I got I had such a bigger revenue, like 30% more revenue, but I actually made a little bit less money because I scaled up my expenses thinking I needed that to handle the revenue. So interesting. So worthwhile.
And if you are in a space, I will say there is a time where that does happen and it will happen, especially when you are trying to scale into more of those administrative hires like an operations manager or a team lead or things like that that are not revenue generating are going to create a little bit of a crunch there. But they still need to be revenue affiliated and have their own key performance indicators, KPIs, that help to drive revenue through growth. So that if you are experiencing that kind of crunch of administrative costs, it should not be for more than like a year or two before you're seeing the payout and the return on investment.
Yeah, that makes sense. Like if you think about a startup, there's a lot of businesses that they're investing, let's say that might be hundreds of millions, but that's a startup cost. We need to establish our systems, get our people in place because the work is starting to come and it will come, but we do need to level up. And I think that's where I was at that time. And if you're listening, maybe you can relate to this, but I'm getting higher end clients. I need a stronger team. Like I need a senior designer now on the team. I need a project manager. And so there was that shift actually now in hindsight. I'm looking at that. I did level up and invest because in the hopes of scaling, you can't service that next level of clients with the same team that you have today doing it the same way you do now, right? You're always going to be improving. And maybe that just means giving someone a raise so that they can step up and that they are available or what have you. So that's actually really helpful. But we don't want that year over year, I guess.
No, eventually you want to see that profit grow. If it's not, then something in your either revenue generating costs and pricing needs looked at, or something in the operating expenses is not generating the investment and the return on investment that you're expecting it to. So take a look year over year at your revenue and your expenses. Being at the end of 2024 and with the clients we have and the conversations we've had, I don't want you to be surprised if you see that it's a little smaller than you thought it would be. And I want to normalize that and tell you that we have seen it across the board. It is not a you thing. It is an industry thing, but that does not mean it's a forever thing either. And you have control over you and your industry and your pipeline and your finances. And there are always things you can do to trim costs, get more efficient, get creative, or raise rates or whatever it is to get out of that situation.
It's okay to downsize. It's okay to let someone go. I mean, if you look at the big tech companies last year, like there was like LinkedIn laid off, thousands of people because they were not generating the revenue and they didn't have that extra revenue for those cushy extra jobs and extra managers. And that's just business. And I think that is something to pay attention to, like, especially as you say, so many designers have not maybe had as many projects this year or as high-end projects or as robust budgets to work with as maybe in previous years. And so it's looking at, okay, maybe I do need to trim. It doesn't mean that that's forever. You need to be responsive as a business owner. And one of the big mistakes that I did make going into the pandemic, because I obviously didn't know what was coming, I had great reserve funds in the business. So I kept every single person on my team on and was like, let's work on our internal systems. Let's create this process. Let's do this. Why don't we update the website? And eventually I ended up not needing all those people, and some of them had to leave. And so I just kept everyone on a little too long. I wasn't as responsive as I think a business owner could have been in that situation. And it cost me thousands and thousands of dollars. And so I think it's okay to say, like, if you're not doing as well, it's okay to look at where can I cut right now?
Well, and that leads into that forward-looking perspective. I want you to think about your pipeline. And what is in the pipeline going into next year? What are you anticipating coming up? I know these projects can take months to talk back and forth between things actually starting, or you might be in the middle of a project that's taking all of your time. Do you have something on the other side of it yet? What's coming up next, and making sure that pipeline is ready for next year, and thinking about how do you want to show up next year? How do you want to budget? Do you need all of the team you have? Do you have enough projects to support that? Recognizing it's a balance, because there is definitely a high cost to turnover. You don't want to let a bunch of people go and then have to bring a bunch of people back. Now you're having to train people all over again. But you do need to look into next year and think about, so we're looking back at last year and looking at this year, but then thinking about next year. What is your pipeline? What are your sales forecasted to be? How much can you do? Who do you need help from? And like you said earlier, what vendors do we want to lean on? What relationships do we want to build? Whether it's with the vendors or with networking partners, or where do we want to grow next year? And how are we going to get there? A lot of people can start this backwards looking year-end process in like September, October, November, and they forget to look forward. And if your numbers are not where you want them to be, it can be somewhat of a defeating exercise. And then you just give up on the year, when this is the time to build momentum. This is the time to get everything ready for the year that you want to have in 2025.
Yeah, I love that. Okay, question for you. Is there an average or a typical profit margin that you've seen in an interior design business? Is there a goal profit margin? What would you say?
It varies, because you guys, again, are so creative, and everybody is very creative in how they price and whether they mark up or whether they just pass through, or if it's flat fee versus hourly, is it design versus, there's so much to it, because profit margin on a markup for a product is going to be very different than someone's services. So the overall profit margin can vary, and you don't have a lot of control on what you can or can't mark up on products. But what you do have a lot of control over is what you're marking and pricing your services at. The exercise I usually walk through with designers, especially if you're a solopreneur, is how much money do you want to make? And how many hours do you want to be working? And that is how we're going to calculate your hourly to then go into how are you pricing your services. And that is more of what I lean on rather than that profit margin piece.
I like that. It's like, let's reverse engineer it. Absolutely. Okay, well, shoot. So it's not like 20% is like an ideal.
I would tell you from a service-based perspective on your design services, excluding any product markup, I like to see for any service provider, interior design included, a 50-50 split. So I want you to be pricing at least double what it's costing you. So if you had to hire this out to somebody else and hire a designer in so that you could spend more time on the business, that's a legit cost. What is that hourly? I want you to be pricing at least double what that hourly would cost you to then cover your operating expenses and have a profit margin left.
Okay. So double, when you say double, you mean the hourly, the cost of that hourly person, or whether it's a fixed fee and you've estimated the hours, what have you. Doubling that covers the operating expenses.
Usually. So like a 50-50 split or a 50%, what we call gross profit margin before all the operating expenses is what I aim for on a service-based item. Products gets a little trickier and the margins don't tend to be as nice, but a 50-50 split on that service side.
Okay, that's really helpful. I think that's really key too, to think about them separately. Like I'm a proponent of making sure you do make money on the product if you're managing it, because Lord knows there's a lot of time involved in that. And absolutely, that's a totally viable business model. And I've talked a lot about that on the podcast, but I think that's interesting, is looking at the profit separately. Like, let's take out the goods and the cost of goods sold. And I find sometimes when I look at my income statement in like QuickBooks or wherever, it's a little funny, because you've got like your top line, like your gross revenue, and then it's like, okay, cost of goods sold is usually a huge chunk of that if I'm reselling a lot of product, right?
Yep.
And so it kind of feels like it skews things a little bit.
It does. And I would not. So I love seeing this recorded, again, a little differently than what you might be used to seeing. First, sales should not just be everything. Having your product and your separate out the types of services you provide is going to be critical, because we want to know how much money you made on the product. But then even within that, I love seeing the product and the cost of it right next to each other, almost like joint accounts. So your cost of goods sold for the product and the product itself. If you're marking up, you should always see more in income than you saw in expense.
Interesting. Yeah. It's not set up that way in the accounting programs that I've used, but I will say, and for the designers listening, one thing I had my accountant do years ago, to your point, Danielle, is I didn't like that it was just like products and then like design fees, because of my fee structure, because I have consultation fees. I have fees for just the design phase, I call it. And then I have a separate project management or implementation phase that I bill separately for. So what I had her do is I had her create 3 categories, so that when I was tracking, I could see how much money did I make in the design phase. And then I can look at that against our hours. And then how much money did I make in the implementation phase? And separately, just how much money are we bringing in consultations a year? And I think that was really helpful. And they had to do something in Design Docs to set that up for me. But it was very helpful at the end of the year, to your point, to look back and see. And that's because I have a phased structure, and that's how I structure my business. But we think we're profitable in one area, but sometimes we're actually not profitable there. We're actually more profitable in another area. I don't know if you've seen that, but.
And you can do the same thing with products. We were working with a client where we separated it out. So you had a vendor where she knew she could mark up. She's got a vendor relationship. That was one set of products. But then if it was, hey, she had to go to Container Store and buy X, Y, and Z, and it was retail. So we had vendor and then we had retail. And then we had some of the commission-based or affiliate arrangement stuff. So you can really see what are the different pieces going through all of those.
So smart. I love that. Oh my gosh. So good. This is amazing, but you're not you're an accountant by trade, but you don't do people's accounting, to be clear. Because if you're listening to this, you're like, great, I'm just going to send everything to Danielle and she's going to file my taxes and we're going to be good. You don't do that, right?
I do not. So as an auditor by trade coming up, I'm a big fan of what they call segregation of duties. I do not think you should give all the keys to the kingdom to one person. So we don't do the bookkeeping and we don't do the taxes, because I think it's important that you have multiple eyes on your books. We do the budgeting, the cash flow forecasting, the strategy, the consulting, but we don't actually do the books. We will coordinate with bookkeepers all the time, and we'll coordinate with the tax preparers all the time to make sure we're strategizing, but we don't want to be the ones doing, because we want to be able to say, I think that went in the wrong place. And just like you as the business owner, if you're doing your own books, if you are so in the weeds, it's really hard to step back and get that 10,000 foot view.
I love that you offer this, Danielle. Like, this has been the missing piece for me for so many years, where I get frustrated with my accountant, who is wonderful, but I think I never fully understood the role. And so my expectation was always so much greater. Like, well, why isn't she helping me figure out the best strategy for this? And let's discuss these categories. Or, I had her helping me with forecasting for a little bit in the early years. So I saw the value of it, but it wasn't really in her wheelhouse. And I was paying a fortune, right, for hourly rate to kind of figure it out as we went along. So you're actually filling in a gap that I have seen. And it's like a missing piece that maybe if you're just starting your design business and you're listening, you're like, I'm not there yet. But listen carefully, because this is something that as you grow, like to have maybe one extra person helping you, even as a solo, there's a benefit in having this person to come in, the CFO with those strategy eyes who understands the business, our industry, our business, and can sort of help you get it set up so that you know what you're looking at. That's what I'm hearing. Like, you can help us set it up so that then every month I can look and I'm not just looking at some jibber jabber that my bookkeeper's done. And I'm like, I don't understand. What is this code here? Why am I, is that in the right category? Oh, whatever. I don't know. I don't have time. Like, really.
Yep. And some of it is in the setup. The other part, and where I feel like the magic happens and you really get to understand the story that your numbers tell, is when we build out that budget and we have an expectation each month for the year and we compare it to your actual results. Because the goal of a budget is not to actually hit the budget. The goal of a budget is to understand why you're not hitting the budget so that you can either make an adjustment to the budget or an adjustment in your business.
Right. Yeah. It's like an exercise to like force you to look at your numbers.
But we do the exercise and then we bring you the answers to say, hey, look, this is what it looks like's going on. This is the story we see. What's actually happening in the business? What happened this month? What happened to so-and-so's check? Why is this payment not here? What's going on? Did we lose a client? Did we add a client? Like, what is the picture?
I like that. It could probably also be something as simple as, I didn't realize I was paying that freelancer as much as I was. I know it sounds silly, but we're busy. Yeah. Oh, those hours look good. Okay, write the check. And then 3 months down the road, you're like, wait a minute. Like, I feel like we should be more profitable. And if you're not on top of the freelancer's hours or something like that, it could just be having that mirror there to reflect, like, here's what you're doing. And here's how it's affecting your business. Oh my God, so good.
Or one of my favorite examples recently, we had a client that was getting billed every month for their software. For whatever reason, the software billed them annually. And we were like, holy cow, what happened here? And they had to pick up the phone and call and get it reimbursed because they couldn't put all that money out at once.
Like, that's a great example. Like, you could probably help business owners sort of strategize, like, do I want to pay for this monthly, or does it make more sense given my cash flow to pay? Because usually annually is cheaper, right? So it's like, I find I'm constantly having that balance between I want to get the cheaper price, but then there's certain months I feel very cash poor, like March. I don't know why everything comes up in March. My personal frustration. It's a long month. Maybe that's why, like 3 pay periods. I always feel so poor in March, but like, you can help with that, right?
Absolutely. And figuring out, especially as we get part of that year-end planning, as we're getting towards the end of the year, if it is the end of your fiscal year, then it's also for especially cash basis taxpayers. What do we want to prepay? Can we prepay? Are there things that are worthwhile to spend money on and bring that tax burden down and add value to the business? Please don't listen to this and go spend money just to bring taxes down and save 20%. That doesn't help your business. But there are things you can do, like the prepaying or the annual, that saves you money in the business. And if there's cash flow to do it and still support your feast or famine cycle, you have to know what that cycle looks like for you as a designer. Then you might be okay to do some of that prepaying and have some of those cost savings.
Right. Oh, so great. Oh my gosh. Okay. That is our time for today. I feel like it's so funny. I never thought I would enjoy talking about money and finance, but I think it's because I struggled for so long. And I still, if I'm being honest, it's still not, I don't love it. I still struggle. I'm like, okay, I'm going to hire you now. And that'll solve all my problems. Like, I'm the type of person who's like, outsource everything because I don't want to do it. That's why I just find it so interesting, because I do see how important it is, especially when you're running a business. And let's be honest, as a creative, as a designer and a decorator, you're running a business. It's not a hobby. And if you're listening to this podcast, it's likely not a hobby. You're likely looking to make money. And so the more you can understand your numbers and your financials and set yourself up for success, the happier you'll be. Like, to your point earlier, Danielle, like, we want to enjoy what we do and have a business that lights us up and that we love and feels good.
Absolutely. It has to feel good. I don't work with any clients that aren't passion centered because it's boring. It's the passion that makes it interesting.
Totally. All right. What's your last nugget of wisdom for us today, Danielle?
What I have had to learn, because I'm a bit of a perfectionist, is that failure is never an option if you refuse to stop trying.
failure is never an option if you refuse to stop trying.
Like if you're always moving forward and you're always trying, then you're never going to fail. You're always going to figure it out one way or another.
It's just learning and you keep moving forward. It's like when you stop, you failed because you didn't try again. Love it. So good. That's like the best nugget ever. I don't think we've ever had that one here. Thank you. This has been so great. Thank you so much. Oh, before we go and sign off today, can you please let our listeners know where they can find and follow you?
The number 4 corners, CFO.com.
I love it. Thank you.
Thank you. This was so much fun. Any chance to get the head out of the sand and make it feel more accessible. I feel like so many accountants and CPAs tend to talk over their clients sometimes, and you end up with a deer in headlights and you don't even want to talk to them anymore. And if this just even spurs a conversation with your bookkeeper or your accountant so you can better understand your numbers and take control of them, that made my day.
I love it. I can't even tell you how many conversations I've had with my accountant where I feel so stupid. I'm like, I'm sorry. I don't understand. Can you repeat that? What do you mean by that? And then I leave the meeting and I do feel disheartened and a little bit like, oh God, I don't want to ask again. I'm embarrassed. So thank you. That's such a great point. Thank you for being here today. I can't wait for everyone to share with us how much and what specifically they took away from this episode.
Thanks, Rebecca.
Okay, that was amazing. I seriously am considering hiring Danielle and her company for my business because she fills that missing piece that I've been trying to fill myself over the years by creating my own financial forecasts and looking at the number and creating budgets. And let's face it, I don't want to do that. I want someone else to do that. I hope you guys enjoyed that episode. I would love to know what your big takeaway was. Hit me up on Instagram, send me a DM and let me know. What she has to offer can be a game changer for your business. I had someone like Danielle on my team early on. I can only imagine how much more profit I would have retained because I would have had somebody helping me strategize and plan and really helping me see my business for what it was instead of putting on the blinders, putting my head in the sand and just keeping moving forward, hoping that I would just make more money with a project, hoping a person would work out or hoping another project would come my way. There's so much power in having somebody there as your real business partner, looking at the numbers to help ensure that you're successful. Anyways, I hope you guys enjoyed that episode. Thank you for listening. I'll see you soon.
The Resilient by Design podcast is produced by Vera Marquez, edited by Abby Circatella, and hosted by yours truly, Rebecca Hay.